Hi, hello, my dear CA final aspirants. So, welcome to this descriptive part discussion of November 24 exam. So, as I already told you in the paper review of MCQ, so that the paper was very lengthy, and I also gave a disclaimer that whatever answers that I have given is based on the knowledge what I have and based on whatever is being asked in the CA exams over the past. But there could be certain contradictions. It could happen because it's all about the assumptions that we take and not that. So ICI suggested answers are perfect. Sometimes there are errors in suggested answers also. Okay, so therefore don't form an opinion after going through these answers that whether you have done correctly or wrongly, etc. and all. This is just a thumb rule for you to cross check as to whether these answers are in line or not. Okay, so mainly for that purpose only I am discussing this. So I am not telling that these are the only answers which are perfect and the other answers are wrong. Okay, and even ICA many times they also will tell that alternative answers will exist. Okay, so without further delay, let's move on to the case study 1. First question in part 2. Sacha and Sud Limited is a registered supplier of taxable goods and services at Raipur in the state of Chhattisgarh under regular scheme. So they have given that they are under regular scheme. Head office of the company is at Raipur, whereas its branch office is situated at Ludhiana, Punjab. It furnished the following information for various activities or transactions made during the month of April 2024. So first transaction is an outward supply. They have clearly demarcated outward supplies and inward supplies. The first one is an outward supply, supplied goods to Mathadin and Sons in the state of Rajasthan on the instructions of Dhananjay Associates. So on the instructions of a person, when we deliver the goods to a third person, the billing address only will be taken as a place of supply as per section 10(1)(b). Accordingly, in this case, the billing address is what Dhananjay Associates, that is Chhattisgarh, will be taken. So that will be the place of supply and it is intrastate and it will be taxable. We don't have any exemption with respect to this. The contract for such supply was for the delivery of goods at the buyer's premises and includes fixed transportation cost of 20,000 irrespective of the actual freight paid. And generally when freight is incurred and recovered from the recipient, it should be included in the value as per 15(2)(c). So as per 15(2)(c), it should be included in the value, and the given price it is given that it is already included. So that is what they are telling. The contract for such supply was to deliver at the buyer premises and includes fixed transportation cost of 20,000 irrespective of the actual freight. It is indicated separately in the invoice issued in this respect of supply of goods. So therefore we are taking 8 lakhs only as the value. So because it is included and we don't have any additional information which says that this 8 lakhs is excluding that 20,000 rupees. So they may be charging it separately, but usually everywhere the contract value will include this. That's what they're telling. It is to be included and the given price it is already included. So further inclusion does not arise. So 8 lakhs will be taken as a value, and even for the transportation also the rate of GST will be so 18% only, because they have given the rate of GST for transportation as 5%. So 2.5, 2.5 and 5%, but that is not applicable in this case because here it is included in the value, and moreover whenever the freight is incurred always, so it's a composite supply, the principal supply is goods which is taxable at 18%, so that will be taken in that case. And here it is intrastate because supplier is located in Chhattisgarh and place of supply also Chhattisgarh. So therefore gross GST under FCM. So here you can see first transaction 8 lakhs into 9% CGST SGST 8 lakhs into 9% 72,000. Then the next transaction, amount received for sale of loading tempo used for transportation of goods to Mr. Suresh. Loading tempo was purchased at 4,80,000 and its depreciated value at the time of sale was 2,40,000. So we have notification 8 of 2018 which says that whenever motor vehicles, certain specified motor vehicles, so which are depreciated and on which ITC is not availed, if it is supplied, we need to take the margin, that is sale price minus purchase price. Okay, but here we need to assume that this particular motor vehicle is specified under notification 8 of 2018, and accordingly what is the sale price? Sale price is 1,80,000 but the purchase price is 2,40,000. As the margin is negative, the value will be taken as nil. So this part is there in our solved workbook. So in solved workbook comprehensive questions, in one question this part is mentioned and I have answered it accordingly. notification 8 of 2018. So margin is negative and the value will be taken as nil. Then provided intrastate supply of sponsorship services to Vidhi agency, a proprietary concern of Raipur. So sponsorship services to individual proprietary concern, not body corporate or firm. So it will be coming under FCM and it is given as intrastate. So due to that reason, 50,000 into 9% 4,500 and 50,000 into 9% 4,500, that is taken as the answer for this. Then received as fine from Vipul, a registered person, for delayed supply of goods. Such payment was made as a compensation for margin loss cost due to price reduction between due date and actual date of supply. There is no express contract in this respect. So as there is no contract, it will not come under liquidated damages. The difference between liquidated and unliquidated damages is that if it is arising out of contract only, it will be called as liquidated damages. Here it is not liquidated damages, it is mere compensation which is payable. So mere compensation payable as per CBIC circular is not treated as consideration. Consequently, it will not become supply. So that we need to write. So it's a mere compensation, and this is actually an RTP part. Okay, in RTP they have tested this. Then invert transactions intrastate. So therefore here nothing. That's it only. And 76,500 and 76,500 is taken as this EGST, SGST. And invert transactions they have given. So first one, intrastate purchase of goods from various registered persons. Out of this 7 lakhs, goods of 1 lakh was received on 1st May. Right now we are doing the computation for April 2024, and when the goods are received in May, we cannot take ITC because one of the conditions for availment of ITC is that as per section 16, so we should have actually received the goods. So in the month of April it is not received, so therefore May month only we can take ITC. We can take ITC only to the extent of 6 lakhs, and on that whatever GST is paid, it is given as intrastate ITC not available on goods not received. So but can we take ITC on 6 lakhs component? Yes. So with respect to the 6 lakhs component, we can take ITC and it is given as intrastate purchases. So due to that reason, so what will be the first transaction? 6 lakhs into 9% and 6 lakhs into 9%. Okay. So 54,000 and 54,000 will be taken as the CGST and SGST credit with respect to this, that is the 6 lakhs component. So only 1 lakh we cannot take ITC, but remaining 7 lakhs, out of 7 lakhs, 6 lakhs we can take ITC, and there is no other information. So definitely ITC not available on goods not received, and it is taxable under FCM, so we can take ITC. Rent paid to Indian Railway for office premises situated in the state of Chhattisgarh. So it is FCM. So generally Indian Railways always, all transactions of Indian Railways is covered under FCM. So because of the amendment, so it will be taxable under FCM and ITC will be available. So 40,000 into 9% and it's an intrastate. So 40,000 into 9%, 40,000 into 9%, 3,600 and 3,600. Then next one, what we have is representation service from Mr. Vikas Gupta, an advocate of Delhi and unregistered person under GST towards dealing the GST appeal matters with the Commissioner Appeals. So representation services, we can take ITC with respect to this, and moreover it will come under RCM. So ensure that it is kept under RCM liability. So what is that? 1 lakh into 18%, that is 18,000. 1 lakh into 18%, 18,000. ITC can be availed. Yes, ITC can be availed with respect to this. There is no restriction. So we can take ITC with respect to that. Okay. So 18,000 ITC also can be taken. And why it is interstate, why not intra? Because advocate is in Delhi, general provisions we need to apply, location of recipient will be taken as a place of supply, that's why it is interstate. Okay. Then next, additional information, the company paid 15,000 towards the actual freight to Mr. Shailendra of Chhattisgarh, a truck owner and unregistered person, in respect of supply of goods to Mathadin and Sons in the state of Rajasthan. Mr. Shailendra has not issued a consignment note. As a consignment note is not issued, they will not come under GTA, because who will be called as goods transport agency? Any person engaged in transportation of goods by road and issues a consignment note by whatever name called. So in this case, they are not issuing consignment note, means they are not GTA. So transportation other than GTR courier agency is exempted. That is about this. On 15th April, the company acquired 1% additional shareholding in one of its subsidiary company for a consideration of 10 lakhs. So acquisition of shareholding as per CBIC circular, holding the shares into related company by holding company and subsidiary company is not a supply, because securities or shares are neither goods nor services. Due to that reason, then the company made interstate purchase of goods of 1 lakh to be used for discharge of corporate social responsibility referred to in section 135. ITC not available because it's a blocked credit, and we need to compute. So we don't have much adjustments in this. Actually, this time comparatively the 14 marks question is little easy only. So this is about gross liability under FCM, then RCM liability, and input tax credit 54,000 plus 3,600, so 57,600 and 57,600, and IGST 18,000, and thereafter gross liability 76,500, 76,500 minus this 18,000, so CGST, SGST 9,000, 9,000. Then so we can reduce this 57,600 and 57,600, so 76,500 minus 9,000 minus 76,500 minus 9,000 minus 57,600, that will come to 9,900. So 9,900 CGST and 9,900 SGST, and RCM will be 18,000. So therefore 9,900, 9,900 and 18,000 is the net GST payable. That's the answer for this question. Then next one, second one, Mr. Ayush is a registered supplier in Ahmedabad, Gujarat under GST law. He provides the following information pertaining to various outward supplies made by him during the month of March. What is the question about? So from the above information, compute the GST liability of each item separately on which tax has to be paid by Ayush for the month of March 2024. First transaction, see this is a little tricky. Vijay Vyapar Chamber of Commerce organized a business summit. Nuba Private Limited, manufacturer of ready-made garments, sponsored the summit and paid a sponsorship fee of 1,80,000 to Vijay Vyapar Chamber of Commerce. Okay, so this is something. Mr. Ayush, an independent director of Nuba Private Limited, provided the services to the company in relation to this. So means for this sponsorship, something they have facilitated, and Nuba Private Limited paid 40,000 to him as remuneration. Now in this case, what we need to see is that they are an independent director. Independent director, any remuneration paid will be subject to TDS under 194J. So due to that reason, it will be covered under supply, and it is director services to the company which will be covered under RCM. Sir, why can't we take it as FCM by applying services provided by the director in his personal capacity? Then the words independent director should not be given here, because nowhere it is mentioned that it is in his personal capacity, because they are not doing the sponsorship. So they are just doing this particular transaction, and we cannot take the view that it is under the personal capacity. If you have taken personal capacity, then it will come under FCM, but we cannot take that assumption in this case. So this information what they have given, because basically sponsorship they are not doing. So due to that reason, as it is independent director, services provided to company, and 40,000 is paid as remuneration. So therefore TDS under 194J, so it will be taxable under RCM. So it will not be taxable in the hands of the Ayush, in the hands of company. That is the answer we need to write. Then supply of railway equipments by way of transportation of vessel from one place in India to another place. So actually for between the places in India, vessel, so specified goods or notified goods is only exempted, but railway equipment is not covered under that notified goods. Due to that reason, it is taxable and it will come under FCM. Then service by way of storage or warehousing of processed tea. Processed tea means it is not agricultural produce. Due to that reason, it is taxable under FCM. Healthcare services by his clinical establishment of providing rooms having charges 3,100 per day to a person receiving healthcare service, to inpatients. So if the value does not exceed 5,000 rupees per day, it is exempted. Then service of a guest house for lodging purpose having value of supply of a unit accommodation 800 per day. Again, it will be taxable under FCM. We don't have any exemption with respect to this. So consequently, so here if you see 40,000, so it will be taxable under RCM. It will not be taxable in his hands. and 1,20,000, 70, 72,000, 2,62,000. On the 2,62,000 CGST 23,580, SGST 23,580. That will be taken as the answer for this. But basically we need to compute the GST liability separately for each item, means point by point we need to show that in the exam answer. Then next one. So this B part 2B is actually related to a CBIC circular on internally generated services given by head office to the branch office. So see this, and this particular part is there even in our every book I have given in input tax credit chapter while discussing ISD versus cross charts. Below that I have given this particular chart. So Messrs Ronak Limited, having a registered office in Maharashtra, providing a service to its branch office in Kerala in the month of April 2024 by way of carrying out administrative work with the use of service of employees working in the head office. However, the head office is not including the salary cost of the employees involved in providing the said services while issuing tax invoice to its branch office. So it's like internally generated services. So these internal generated services, what will be the value of service, and also discuss whether the salary cost of head office involved in providing the said service has to be mandatorily be included. There is no mandatory provision of including the internally generated services cost like employee cost to the branch offices. But if the invoice is raised by the head office to the branch offices, whether they included that salary cost or not, but we need to see whether recipient is eligible for full ITC. It is given that recipient is eligible for full ITC, then the open market value is nothing but the invoice value that will be taken. And is it mandatory to be included? No. What will be the value if the head office has not issued the invoice to the branch office? For that also we have a provision. If invoice is not issued, the value will be taken as nil. So as per that circular. So if invoice not issued, value will be nil. So this part we need to write. Actually it is an amendment, and I have posted the amendments video for November 24. There also I have discussed this particular part. Okay. So you can refer to that. Next one, C is related to customs. 2C, Sneha International Limited, Bombay, imported a drill machine from USA by air. Machinery reached Delhi airport, from where it was transshipped to Mumbai airport. Usually transshipment charges will not be included, only transit charges will be included. So they have given in the question transport charges that will not be included in the value. And contracted CIF price of the machine was US dollar 20,000, which was to be delivered in February 2024. But on request of Sneha International Limited, supplier agreed to deliver the machine in January 2024, that is upfront, for which US dollar 2,000 was charged extra in contracted CIF. So generally what should be taken, whether the negotiated price should be taken or the contracted price should be taken? Always the negotiated price should be taken, because as per section 14 of Customs Act 1962, the price prevailing at the time and place of importation should be taken. So even this part is tested in IBS also in one question. So assessable value under section 14 is price at the time of import, that is $22,000 should be taken, and the contracted price is irrelevant in this case. Okay, so now what we are doing is that first we need to arrive at the FOB price. Why? Because there is air freight, and air freight we need to restrict to 20% of FOB due to that reason. So first we are taking FOB price, CIF price minus freight minus insurance, that is $22,000 minus freight will be $5,000 and minus $1,200. So FOB price will be $15,800. Okay, now what happened is that we need to take the exchange rate 83 rupees per dollar. So 15,800 into 83, 13,11,400, and air freight. How much should be taken as air freight? Actual or 20% of FOB, whichever is lower should be taken. What is actual? 5,000. 20% of FOB, that is 15,800 into 20%, 3,160, whichever is lower, into 83. So 2,62,280. Then the insurance will be 1,200 into 83. So this is how we will get the assessable value. Inspection charges. For this there is one case law also. So vendor inspection charges, Bombay dyeing case, Supreme Court, whether vendor inspection charges incurred by exporter on his own to be included in the value. So for that, vendor inspection charges by foreign supplier on his own and not required for making the goods ready for shipment, or not including the assessable value of imported goods. Exactly that part only tested here. Inspection charges of drill machine paid by the supplier, that is exporter, the same was neither mentioned in the contract and not required for making the goods ready for shipment. So as per that Bombay dyeing case, it should not be included in the value. Accordingly, the assessable value needs to be computed. Then next one, 3A, Vijay Private Limited of Chennai, Tamil Nadu, exclusively manufactures and sells V2Z, which is exempt from GST. Wide notification with certain taxable supplies. So they are making both exempted supplies and taxable supplies, because of which they were registered under regular scheme. Further, all the inward supply are taxable under FCM. The company expects the sales to grow in the current year, for which they purchased a machinery, and the machinery is purchased on 1st August 2023. The purchase price of the machinery is 45 lakhs excluding GST at 18%. Now what happened? With effect from 1st December, the exemption available on V2Z was withdrawn by the government, whether it is 18(1)(a) or 18(1)(d), because they are already a registered person. Already registered person whose exempted supply became taxable, they can avail ITC on capital goods. So 18(1)(d). So we need to take the date of conversion 1st December. So we need to see capital goods GST paid minus 5% for every quarter or part thereof from the date of purchase till the date of conversion. So date of purchase 1st August 2023 till the date of conversion 1st December 2023. So 2 quarters, that is July, August, September, October, November, December, 2 quarters, 5%. So 7,29,000. So is the ITC that can be taken, because 45 lakhs into 18% minus 5% into 2 quarters. And next, for to avail this ITC, as this ITC exceeds 2 lakhs, it should be duly certified. This form GST ITC 1 should be duly certified by CRCMA, and they need to file this form within 30 days from the date of conversion, that is 1st December 2023, within 30 days. All these points we need to write, then only you will get 5 marks, because they are also asking us to explain the above issues with reference to the provisions of GST law. If you have done only this computation, you may not get full marks. You need to write about this ITC 1 certificate by CACMA, that part also. Then B, decide with reason whether the following independent transaction amount to supply or not as per the provisions, rules and notifications issued under GST law. Number 1, Satyam has lent securities to Kala Enterprises for a consideration of 10,000 rupees towards lending of securities under security lending scheme through an approved intermediary. Ignore the transaction between Satyam and intermediary. They are asking between Satyam and Kala Enterprises. So securities are neither goods nor services, but facilitating or arranging transaction in securities will be coming under supply, and it will become supply under 7(1)(a), because it is activity for a consideration due to that reason. Then next, Patta Limited made supply of goods to its agent Romi without consideration. Romi issued invoice for the further supply of goods to the consumers in his own name. So agent raising invoice in his own name means agent acting on behalf of principal. As agent acting on behalf of principal, so it will become supply between principal and agent, that too it is goods. So 7(1)(c) without consideration, even though without consideration. Then Dilasa Limited recruited Miss Chaya as senior relationship manager. At the time of joining as senior relationship manager, the company paid 3 lakhs towards not joining Milan Limited, a stiff competitor of Dilasa Limited. So now in this case, is it supply or not a supply? It is supply under section 7(1)(a), because consideration for not doing an act. Not doing an act, that is forbearance, is also coming under supply. Okay. Next one, C. So this is related to remission of duty. Rustam imported a sport car from Japan. He paid the applicable customs duty and an order for home consumption was issued. So order has been passed. At the time of actual clearance for home consumption, he found that the sport car was destroyed due to fire occurred at the customs station. The loss of sports car is forever and beyond recovery. So abatement is not applicable. Section 23 subsection 1, remission of duty. Already duty has been paid and the goods are destroyed at any time before actual clearance. Yes, the goods are destroyed before actual clearance. In this case, they can claim for remission of duty. They can prove to the satisfaction of the ACDC that the goods are destroyed, and whatever custom duty paid, they will be able to get the remission. Then, whether your answer would differ if Rustam warehoused the sports car due to delay in legal formalities after complying with the relevant provisions of Customs Act. So, they kept the goods in a warehouse. And in the warehouse, if the goods are destroyed, whether remission of duty is applicable even with respect to warehoused goods? Yes. Even with respect to warehoused goods also, they can claim remission of duty and the position will remain the same. Then next one, question number 4, Messrs MN Limited has a balance of 30,000 as CGST and 30,000 as SGST in the electronic credit ledger in the beginning of April 2024. During the month of April 2024, Messrs MN Limited has the following liabilities: GST payable on outward supply, GST payable as a consequence of proceeding instituted under the provisions of law, which means demand and arrears of tax, demand under 73 or 74, like that. Now, these two amounts we can pay using electronic credit ledger. So, regular liability we can pay using credit ledger. Even the arrears of tax payable arising out of demand order also can be paid. We have a CBIC circular in that regard. So, therefore, both 10 and 5, 15,000 can be paid out of this 30,000. However, GST payable under RCM, no, it cannot be paid using credit ledger. Interest cannot be paid using credit ledger. Penalty cannot be paid using credit ledger. It has to be paid using only the cash ledger. That is a question here. Messrs. MN Limited is of the view that since opening balance in the credit ledger is sufficient to discharge whose liability, it is not required to deposit any tax for the above month. Wrong. So they can utilize only 15,000 and 15,000. Remaining 7,000 CGST, 7,000 SGST, they have to pay using the cash ledger only. So section 49 we need to write related to the payment process electronic ledgers. Then B part, Sunita Industries registered in the state of Gujarat receives machinery for repair in its workshop located in Surat, Gujarat. Import of machinery for carrying out repairs. So therefore, an automobile manufacturing company based in China, so they are importing, and in this case the repair work was carried out by Sunita Industries, for which it was paid in convertible foreign exchange. The aggregate turnover of Sunita Industries was 450 crores in the preceding financial year, but for the financial year 22-23 it was 562 crores. First of all, we will see what is the place of supply. Location of supplier is Gujarat, location of recipient is China. So place of supply under section 13, this is performance based service in relation to goods, but the exception will not be applicable in this case. Why? Because they have not given that the imported goods are exported after or before use, like that. So usually the exception will be applicable when if the goods are temporarily imported for carrying out repairs or any other process, and it is exported after repairs or process without being put to use, but that is not given, means the exception is not there. So due to that reason, we will take location where service are actually performed. The location where service actually performed is Gujarat. Exception not applicable as not given as export without use. So due to that reason, it is not an export of service because the place of supply is in India. As it is not an export of service, then e-invoice is not applicable in this case. Whether dynamic QR code is applicable any financial year. See, right now we are doing for April 2024, that is for financial year 24-25. So 23-24 or 22-23, any one financial year, if it exceeds 500 crores, then for B2C supplies they need to give dynamic QR code. So any previous year exceeds 500 crores, dynamic QR code for B2C supplies. Okay, B2C supplies. And it is not an export of service, and in this case whether dynamic QR code is required is the question. No, because as the again a CBIC circular, as the recipient is located outside India, so when recipient is located outside India, who is making the payment, as we don't have the functional UPI facility outside India, due to that reason the payment cannot be collected by scanning dynamic QR code. So dynamic QR code not applicable as the recipient is located in India. That is the answer. What if it becomes export of service? In case of export of service, anyhow e-invoice is applicable. So the concept of dynamic QR code will not be there. Next, C part is related to provisional assessment. Mr. Shahil, an importer has made provisional payment of customs duty of rupees 2 lakhs under section 18 of Customs Act on 17 July along with security of 1 lakh towards the provisional release of bond. Usually we need to execute a bond for provisional release of goods as per section 18 of Customs Act for provisional assessment, and the final assessment was completed on 15th October 2023 with the duty assessed as 1,50,000. So actually provisionally they paid 2 lakhs, but the final assessment is only 1,50,000. So which means that they should get a refund. The refund order of 50,000 and order of release of security of 1 lakh was issued on the same day, that is 15th October. But we need to find the interest. So what is the time limit within which the refund should be granted so that interest will not arise? 3 months from the date of final assessment order. Actually they made it they coined a very good question here. So what they thought was that so student will take 3 months from the date of application. No, it is not actually 3 months from the date of application, 3 months from the finalization of assessment. So when assessment got finalized, you can see the answer here. Date of finalization of assessment is 15th October 2023 plus 3 months is 15 January 2024, and the actual date of refund here is 25th March 2024. So therefore interest will be payable in this case. from 15 Jan 2024 to 25th March 2024 for 70 days, 6% on this 50,000 interest will be payable, and here you take February 29 days and denominator 366 days because it is given like that. So 574 rupees will be taken as the answer. So in this case, interest will definitely arise in terms of section 27A read with section 18. Okay. Next one. So fifth one, but it's a very good question because many students will think that we need to count 3 months. 3 months they will remember, but the 3 months from the date of application like that, they will think, no, I have stressed this multiple times in the classes and even in rocket revision I stress it is 3 months from the date of finalization of assessment. Okay. Then question number 5A, Swastik Tours and Travels is registered taxable person under GST in the state of Punjab. Its gross receipts from the overseas package tours for the month of February amounted to 50 crores. Out of these 50 crores, 10 crore were received from registered persons. While filing GSTR1 for the month of February 2024, it tampered the amount of invoices issued to unregistered person and reported only 20 crores on account of B2C transactions. So what default it is? Supply without invoice, not invoice without supply, supply without invoice, and thus understating the tax liability of 3.6 crores. Moreover, while filing 3B for the same month, it availed ITC of 0.4 crore on account of fake invoices, so ITC default. So what is the tax involved in this case? 4 crores. 4 crores means it exceeds 2 crores but it does not exceed 5 crores. Then what will be taken as a compounding fee? Minimum compounding fee will be 40% and the maximum compounding fee will be 60%. So it is not 2500. 2500 is general, but specifically depending on the offense it will change, and that chart also I have discussed in the rocket revision. Okay, and even it is there in the book also. So it exceeds 2 crores but does not exceed 5 crores. So 40% is the minimum, maximum will be 60%. So 40% of 4 crores 1.6 crores, 60% of 4 crores 2.4 crores. So this is the minimum and maximum compounding fee in this case. And Swastik Tours and Travels deposit an amount of tax due along with interest and penalty of 1 crore as compounding amount being equivalent to 25% of tax evaded. No, wrong. So they should have deposited minimum 1.6 because that is a question. So they rejected. Why they rejected? Because they paid lesser amount. So you are required to examine the case and comment upon rejection of request. And what is the minimum amount to be deposited? 1.6 crores and the maximum will be 2.4 crores. That should be taken. If this offense is not given, generally if they are asking, then it will be 25% to 100%, but as decided by the officer in terms of the rules. Like that it should be there. But when specifically it is there, you need to take the compounding fee specifically. Of course, yes, many students would have made a mistake in this place. B, Miss Meena agreed by the order passed by the Assistant Commissioner and wants to file an appeal with the Commissioner Appeals. Her accountant, who looked after her GST related matters including filing of GST returns or other compliances online, is on leave for 1 month. So she decides to file the appeal manually. Actually, this is one part which usually not much focused upon even in classes also. Yes, I will admit that in fast track batch and all I would not have discussed this. So because usually when we see the appeals and other things and all, we will not think that this deep the questions will be there. So because in fast track batch no one can do, even revision batch or fast track batch. But what is this rule 108 about? Appeal can be filed manually. When it can be filed manually? Only if commissioner notifies or the copy of the order is not available in the portal. Okay, so this is there in our resource book, I clearly given. So if the order of the that is adjudication order or demand order is not available in the portal, then only we can go for manual, or it is notified by the department, anyone notified by the commissioner. Clearly they mention that it is available on the GST portal, it is available on the GST portal, and there is no notification issued by the commissioner. So due to that reason, manually we cannot file. So whether Miss Meena can file an appeal? Yes, appeal can be filed. But whether the decision taken by Meena to manually file an appeal is valid? No, it is not valid. So that is what we need to write here. To the point, that rule 108, that point if you write, that is correct. Then 5C, Mr. Charanjit, an importer, filed a claim for refund of customs duty paid under protest, which was assessed on the value of imported machinery. The assessment order on the basis of which duty was payable by Charanjit has neither been reviewed nor modified in any appeal. The department rejected the claim of refund. See, it is literally a case, Priya Blue Industries case by Supreme Court. They are asking not to mention the case law name, just the decision if you give, that is sufficient. So here you can see that Priya Blue Industries case. So I have given one summary of case laws in the telegram one day before the exam. Already it was there in the video also, and I have typed it and I have given this Priya Blue Industries. So importer do not agree to the assessment. So whenever you have paid some duty under protest and you don't agree to the assessment, so you can go for appeal, but refund is not an alternative to appeal. So that decision we need to write. Then sixth question, usually the theory question used to be easy, but this time the sixth question they have made it pretty difficult, because the first one, describe the provision of payment of tax and other amount in installment under section 80. That part we will know. So whenever there is a demand order under 73 or 74 or 76, we can make a request to the proper officer to make payment in installments, to pay the outstanding amount of the order in installments, and officer, if satisfied, can grant installment facility of maximum 24 monthly installments including the interest. So outstanding interest payable, that is, it is not like installment without interest, installment with interest. That part we know. Also discuss under what circumstances such payment facility shall not be allowed. This is also there. So what is that? If it is less than 25,000 rupees, installment facility not there. If they have already defaulted and the default is continuing, so then also installment facility not available. If the last year, previous year, preceding year, if the installment facility not given, during the current year also it is not possible. Okay, you can see here maximum 24 monthly installments with applicable interest, not possible if they have already defaulted on which recovery process is on, are not allowed to make payment in preceding financial year or amount less than 25,000 rupees. Okay, that is what we need to write here, and that they have given for 6 marks. Discuss in brief the precautions to be observed while issuing summons under GST law. So this somewhere in study material they have given one paragraph. Okay, so summons itself people will not read. Okay, even revision batch also we will not see all these things. So summons, usually whenever there is a person whose witness is required, so assessing officer or proper officer under the GST will call upon his attendance to examine him on oath and give the explanation or give the evidence. So that is about the summons. But what are the precautions to be taken? So they are telling power can be exercised only when there is an inquiry and the attendance of the person is made mandatory, like required only we need to ask, otherwise not required. And just like that we cannot call the person repeatedly, so minimum we should see as many number of appearances should be as minimum as possible. And whenever he is coming for the summons, he should not be made wait for longer hours, unless that making wait for longer hours is as a part of the strategy or statement recorded during the office hours only, but except having regard to the facts of the case, it can be extended beyond the office hours. So these are the precautions to be taken. Okay, next another question, under GST law, who can order for carrying out inspection and what circumstances? So we need to write about section 67. As per section 67, inspection can be ordered by an officer not below the rank of joint commissioner, etc. And that is commissioner, assistant commissioner, additional joint commissioner only can order. And in case when there is a suppression or ITC wrongly availed or goods are not properly accounted, in that case, so inspection can be ordered. Then C question is related to status holder, and in MIT 50 I told you the status holder concept can be tested in exam. So I have given either RODTEP or status holder could be tested. So status holders they have asked, so we need to write that limits. So what are the limits for the status holder, etc. So that is the answer for this. So that's it about your indirect tax paper. And to be frank with you, what I felt was, this paper was little beyond average only. It's not below average paper, it's not an easy paper, it's really a standard paper, and only those students who attended regular batch or exam oriented batch of any faculty, they would be coping up. And I don't know about other faculties exam oriented, but my exam oriented I have covered this detailed. Okay, and when it comes to fast track batch, yes, usually fast track batch will be like a quick recap. So in 90 hours only we take, so in that we cannot cover all these things, but out of this majorly like 75% is covered, but the 25% always it is there, that I will give as a disclaimer in the fast track batch. And many students are messaging me that sir, we watched only revision batch and we went for the exam and we are not able to do that, you have cheated us. See, where did I tell you have to watch only my revision batch and go for exam. I never said that. So if you are watching only revision batch and going for exam, that is not my mistake, boss. You should study and then you need to watch the revision. But if you see that okay, revision alone is sufficient, I can go for exam, you cannot answer for 100 marks. If every student who watches revision batch and go for exam and attempt for 100 marks, then what's the point in normal students sitting for months and preparing? Definitely not possible. So please don't blame me. You introspect yourself as to whether you have put the effort or not. Okay, and sincerely, whatever out of my heart I am telling, I have done the justice for regular batch and exam oriented batch, and to the extent of 75% to the fast track batch, and revision batch is really a revision only. That is not a conclusive wherein something is available in YouTube, we can just follow that and go for exam. Please don't think that way and don't blame me. Okay, and maybe if I have given such a kind of opinion, I have not given, many students will be commenting, I attended only revision batch and I completed like that. Don't believe in those statements and all, because they would have already attended the classes and they would have watched the revision and that would have been useful. Okay, it does not mean everyone who watches the revision only go for exam and clear CA final exam. Come on boss, it is CA final exam, so you have to understand that. Okay, then suppose if you are appearing for May 25 and watching this video, so I give you, this is the benchmark. Maybe beyond this only the ICI will go, or to this extent they will be maintaining the standard, because May 24 paper was more on amendments. November 24, many times I told in the class also, it will be so deep, they will go deep. That is usually the trend of ICI. May exam always on amendments, November exam always on the deep provisions. That's how it will be. So for again May 25, so it will be on amendments only. Okay, and amendments video, yes, I'll be giving to all the students who purchase the lectures for May 24, November 24. We are giving them all the amendments lectures in the Google Drive itself, and we will be making it available to those students. And next thing is that even the latest batch which is there. So if you have not at all prepared anything, please go for the regular batch. If you have already purchased our classes for the last year, don't worry, amendment lectures will be given. Amendments itself is 100 pages. So please don't ask me to put it in the YouTube. So not possible, because that is too much of hours. And definitely I will make it as a crisp and I will post it in the YouTube for sure. But the detailed ones and all, it will be made available to the Google Drive students, the detail and the to the point amendments like a revision manner, that I will post it in the YouTube for sure. Okay. Thank you and all the very best. If you are appearing for May 25 and those who appeared for November 24, don't worry. So these answers and all, don't see and think that okay, so completely gone like that and all, because already you have given your best, and what furthermore you can do is just to wait for the result. Okay, pray for your result. I will also pray for you. My prayers will always be there for you. All the very best. Stay happy, stay blessed. Signing off.